I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome back to the show, Eric. I hope you had a good long weekend.
Yeah, I did. Thanks for having me back, Jim. Hope your weekend was good as well.
I'm wondering here if we're going to see a trend with China cracking down on currency. They've banned cryptocurrency sales now, I guess including Bitcoin having a big plunge. And also, Chinese Investment Corporation has sold off 42 million shares in Tech Resources. And I'm wondering, is this something China is planning to do to try to get more money home and keep money from going out?
Well, I don't know if I could answer that specific question real intelligently, but I think there are kind of some related analyses there that might give some clues. The first dealing with cryptocurrency and Bitcoin and Ethereum in particular, since they're the ones I've started to do a bit of analysis on. But I was talking in late August just about another intermediate cycle, kind of like the one in early June, that was calling for a impending top in the cryptos. And the announcement this weekend seems to certainly fall in line with that. But you've seen, you certainly saw a big hit in those currencies over the weekend, but they're trying to bounce here. So it's a big question of whether this stays contained to China or whether it's something that mentality or mindset starts to create a little bit of worry that may flow through the cryptocurrency market. But on a bigger, broader scale, when you talk about the question of whether China's bringing some money back home, or at least trying to get a little tighter control over financial markets, it certainly, from a market standpoint, there are certainly some similarities to middle of 2015, and I'm speaking of their equity markets, where you kind of have this topping phase that they're looking very strong for quite a while, but then you start to get those chinks in the armor. Now, back in 2015, that whole thing came apart very quickly between June and August. I wouldn't necessarily look for as quick or sharp of a drop there, but I think you're going to see the Chinese equity markets start to go through a topping phase here, and I'm looking out to early 2018 for the next important bottom. So I think that third quarter and fourth quarter could certainly see that shift and that move starting to the downside, and that certainly is in lockstep with what I've been talking about for domestic equity markets. And in particular, the decennial danger period that I've written about, and just how you have this decennial cycle where every decade the 7-year flowing into the 8-year has a substantial sell-off, and I think it was 13 of the last 16 decades, going back to the 1850s, you've seen that happen. And more recently, you've seen it getting more and more consistent. But I also took that analysis to the next level and really focused in on three key periods I was watching. The overall, what I call the decennial danger period, is that period between July and November where either the entire sell-off, like, for instance, back in 1997, the entire sell-off is in that time frame, or the largest majority of the sell-off comes in that July through November time frame. So along with that decennial cycle, that becomes a far more bearish period. And then I also documented how in the last 20 years, since that 1997 and even 1998, there's been a 2-year and a 3-year cycle where the same thing has happened. So in 2017, you have all three of those, a 2, a 3, and a 10-year cycle, each one of which has been an omen of significant sell-offs between July and November of the year, and they're all coming together in 2017. But back to what I started to say there, breaking that down into three specific periods of heightened danger, heightened synergy of those sell-offs, that the first one was from late July into August 18th to the 22nd. That's when the first low was expected, and the equity markets really adhered to that, and almost every one of them bottomed right in August 18th or 21st. And the second danger period that I published and put out there is from September 5th to the 29th. And so we come in today and all of a sudden the markets are starting to sell off. And then there's a third one where I think could be the most dangerous, coming out a little farther down the road, but we can discuss that in an upcoming interview. But I think right now I'm really watching this September 5th through 29th time period and some specific indicators within the coming days that would really validate that for me. But all of that just kind of goes in line with what you're observing with even China. Is it going to be one of these things where you start to see a little more conflict within the markets, and even when you take that to a bigger geopolitical scale, more and more verbal conflict and potentially moving into trade conflict and other struggles between the U.S., China, Russia, with someone like North Korea kind of being the trigger point there. That there's certainly a connection between it all, a common thread between it, and we see and keep hearing the threats of trade war and things related to that. So the Chinese market, the U.S. market, there could be a couple of fundamentals that trigger some coinciding sell-offs. Not just the couple that you've mentioned right here.
Now, when we hear countries talk about trade wars, the elites don't really care because they'll always be looked after. It's the average guy who gets hurt. Why do they engage in these verbal wars and then real trade wars?
Well, I think there can be so many reasons to that, and to really dig into that would take hours, but we've seen in the current administration and in some of the festering or simmering conflicts, both trade and otherwise, that there's also an image that's needing to be conveyed, and there's almost a vengeful thing in there when often the wisdom of that movement is not assessed properly. And again, you look at, I'm going to make it a little more of an analogy, looking at the geopolitical conflict between America and North Korea, and you kind of get this, it's as much a macho bravado type of thing on the surface. There's far more to it than that, but you start getting this, how shall I say it tactfully, those type of matches, a urinating match where, each one has to outdo the other, but by doing that also back themselves into a corner. A few weeks ago we hear about Fire and Fury accompanying any future tests or provocations, and now all of a sudden we get some serious tests, and now it becomes kind of a very anxious thing, because some things have been said impulsively or in haste without measuring the wisdom of them, and now you got to back them up with action, or at least you feel like you have to back them up with action, or any credibility is lost in the process. And I think that's some of these trade wars are, to kind of show, okay, I'll meet your initial move, whatever that might be, whether that be a sanction or a currency manipulation or many other things. But okay, I'm going to show you that I'm just as strong, we're just as strong, and then it just goes back and forth. And like you said, some people are immune from it, although, when it hits the markets, when you see these sharp moves down in equity markets, when the market gets spooked, it starts to even impact the elites as well, just from a different angle.
We'll have more with Eric Hadik right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Eric Hadik. Eric, what kind of impact are we seeing on the gold and silver market right now? Again, is this outside forces or are these natural cycles at work?
Well, certainly the cycles reflect and time those natural forces and those market forces and even manipulated forces. I would never be one to, even though I'm a strong advocate of cycles, I'm not trying to say that they do something or govern something outside of all of those other forces. The real value to me is that they not only time a lot of those shifts in psychology, shifts in economy, but they give clues well ahead of time of those coming shifts. And even coming into 2017 was a perfect example. I know you and I had a couple interviews last year, even early in 2016, where I discussed my analysis in the dollar and these cycles in the dollar that were telling me 2017 was the time for dollar cycles to turn down. And because of that market analysis, it was indicating to me that we would likely see a Republican administration, because since the mid-'80s, every one of the dollar's big advances have been during Democratic administrations, and every one of its big declines have been during Republican administrations. And my work was showing that the dollar was getting ready for a multi-year turn, and consequently, and this was even well before Trump was the nominee, it just said to me that a Republican administration was coming into into power. And my point there is just that this cycle analysis gave me when you start to look at some of the other correlations and connections, it gave a very good indication of what to expect in 2017. And with relation to the gold market, I said back in 2015 that I thought we were going to see a bottoming process starting in late 2015, that 2016 would be what I called the golden year, and I really specified what I meant by that was I thought we would see the largest advance in 3 to 4 years, and that would give an early warning sign that gold was shifting from a bear to bull market, but there would be a 1 to 2 year bottoming phase. And subsequent cycles told me to look for a higher low in late 2016 and then another higher low in mid-2017, and that is kind of that base being built even as the dollar is showing signs of weakness, and gold is getting to that point where it's much closer to the phase where you start to exit that bottoming process and start to enter a more accelerated advance. So from a wave and cycle structure, gold is fitting perfectly. All these things were discussed months and a couple of years in advance, just what the cycles and the potential wave structure was showing. But now you've got these fundamentals kicking in just at the time they normally do. And I emphasize this in a lot of my writings, but the big fundamentals rarely kick in at the top or bottom of a market. That's when you see kind of some subtle fundamentals, if any. It may just be an exhaustion of buying or selling, and then the market starts to plateau or starts to bottom. But it's after it's gone through that bottoming phase and spent some time building a base and given many technical signs of developing strength, then it gets close to that acceleration point, and that's when you usually have your fundamental trigger kick in. And that's why a lot of people aren't prepared for it ahead of time, because they haven't been watching the markets, haven't been watching the charts, and they wake up one morning and a certain fundamental factor is kicked in and the market's already off to the races. So I think that gold is reflecting both. It's very powerfully validating the cycles that have been discussed for a couple of years now, and at the same time it's reacting to growing positive factors that I think you're going to see an inflection point in the very near future where things really kick in and you get more of a accelerated move to the upside. I do think there's at least one more pullback in there before the real breakout, and that could provide an optimum buying opportunity. But I am watching as all of these, you see a lot of potential fundamental factors on the horizon, and it's often a question of which one, if any, are going to kick in. And as you see momentum start to build in them, the market usually reflects it. So, long answer to a brief question. I do think that gold is adhering to the cycles and also reacting to the developing fundamentals, both concern over the dollar, both geopolitical concern, and I think that also in the next year or two you're going to see commodity inflation come back too, linked to other cycles that I've discussed.
We'll have more with Eric Hadik right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Eric Hadik. Eric, you just mentioned you think commodities might be going up. Any specific ones or in general?
Well, I think that you're going to see a general rising tide, whereas as the dollar struggles and you start to get some of dollar weakness related strength in some commodities, but I'm looking at many of your food commodities, grains in particular, and it just goes along with this recurring cycle of food crises that I've talked about the last several years, where towards the end of the decade, on a very consistent 40-year cycle basis, you've seen these recurring food crises, and often they're a combination of natural and man-made forces. And you look at even 40 years ago, the last time this cycle was in force, and the late 70s, you had some natural forces, but there were also man-made forces, both with the dollar, with embargoes and other type of trade-related issues. And so it's the synergy of those, like so many powerful moves in the markets. It's not when just one factor is impacting them, but rather the synergy of multiple factors. And you go back 40 years before that, and you had the Dust Bowl really wreaking havoc on crop production in the U.S., but at the same time, you had one of the worst famines in all of history in Soviet Union, and that was primarily man-made in the 30s. And going back in the 1890s, the late 1890s, you had several issues more with wheat and South American crops. And the late 1850s was the Civil War drought that drug on for 8 or 9 years, from 1856 to 1865, I believe it was. You go back to the 1810s, and at the very end of that decade was the eruption of Mount Tambora and the ensuing year without a summer, and then through the end of the decade there was famine and food crises. And I could keep going back. It goes back hundreds of years that you see these challenges to the food and to crops, but whether that is a massive shortage or just a more isolated one that really spikes the price, kind of like you saw in the late 70s. It wasn't that there was rampant famine all over, but there were enough combined factors to have many food markets double and triple in price, everything from grains to coffee and cocoa and other food markets. So that's the recurring cycle that I have been documenting and discussing for the last 5-6 years, and warning that as we neared the end of the decade, that would grow in intensity and be that much more applicable. But at the same time, I've also talked about some very unique climate cycles that I saw, and I'm not a meteorologist, so I can't claim that I've got all the precise fundamental support for this, but just recurring cycles, both in not only warming, which that's not surprising anyone with that type of analysis, except for the fact I think we could see a peak in warming towards the end of the decade. and I kind of documented these 40-year, 80-year, 100-year, 200-year, 500-year cycles, all kind of lending credence to that. But the other related cycle that I talked about a couple of years ago was that I thought some of the drought cycles you were seeing should shift to more of the drought would become the secondary concern, and that flooding would become a greater concern from 2016 into 2019. And you really, over last winter, you saw that start to be validated in California and in critical areas of South America. And now this entire summer, you've seen from typhoons to hurricanes that are, really exceeding previous precedents and extremes, and it's certainly fitting with this these kind of precipitation cycles that look like we would see floods being a much greater stressor. And one of the things I talked about with that too is in the past when you have seen floods and the impact they have on the erosion of topsoil, and then that filtering down to crop raising.
Well, you talked too about the weather cycles. Vancouver, an extraordinarily cold and wet, long winter. And then since June, we haven't had any rain, and we've had a horrible forest fire season in British Columbia, the worst ever, with an area bigger than Prince Edward Island burned. So even in places with moderate weather, like the lower mainland of British Columbia, we're seeing extremes.
Yeah, and I think that is certainly going to grow in intensity, and that is often what you see at transition points, at the final years of certain cycles, which is why, or that just kind of corroborates what I've been discussing, where I thought we would see another temperature spike leading into 2019, 2020, but at the same time you would see this this more extreme with flooding cycles. But then there's other factors that I think will also come into play there. But when you talk about, you even look down at California, and you had the drought and so many forest fires for so many years. This year, or at least recently, it seems like a lot of the fires are where you're talking about up in even the Northwest U.S. has really been hit of late. But in California, you had those for years that really kill off so much of the protection for topsoil, and then they had just massive rains and floodings this past winter, and you do that a couple times, and you do that in some critical crop growing areas, and all of a sudden you start to magnify exponentially the impact of those weather extremes with factors, with consequences that most people may not have considered or anticipated beforehand.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. On YouTube, we're Talk Digital Network. Questions for the show or our guests can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.